Okay, well actually Mayuresh Joshi of Angel Broking has also joined us. Mayuresh, first up, this Bharti Airtel news, some off-the-cuff calculation is saying that they may have probably sold it for 6,000 crores, their Burkina Faso Sierra Leone arms. Your take on the stock?
Morning, Lata. I think clearly the acquisition had been on a higher price, and looking at the way the EBITDA was panning out for a lot of these countries within the African subcontinent, I think the confidence was not coming through. Having said that, probably I think the sentimental rub-off will be seen positively on the stock, at least for the day. But again, I think in terms of core performance, the core business is not doing that well. If you're probably looking at data revenues probably moving up, I think the data revenues might probably, in terms of per megabyte, actually start inching downwards over the next few quarters, and clearly I think competition from Jio is going to play a big part in that. Come to the voice part again, I think though you've seen volume traffic could probably come through, you're probably seeing realizations crowding out there as well. So clearly I think with spectrum payout, with the kind of capex outlay that the company has come out with, I think it's going to clearly play out on the return ratios of these companies. So I think we're maintaining a neutral call on the stance, but clearly I think the stock might react positively for the day, but clearly I think over the next few quarters, I think the business performance in our opinion will still remain very, very soft.
Mayuresh, morning. What about DCB Bank? That stock has corrected quite a bit in the last 6 months, from 150 all the way to 75, and the numbers looked quite good yesterday. Would you buy that bank at any point?
Morning, Sonia. I think clearly the numbers were far better than what probably a lot of analysts on the street were expecting in all counts. I think the loan growth was quite decent. The asset quality in fact came in lower. So clearly I think the rub-off effect would be seen very evidently on the stock, at least for the day. However, I think what the management had commented last time around, and with the branch expansion that it probably had, I think a little more clarity requires to be thrown on that aspect. And clearly I think the OPEX part of that expansion needs also to be worked out in a very careful manner. So clearly I think you're talking about A, CASA growth, B, I think the kind of branch expansion that might probably lead to higher OPEX expenses, and C, probably in terms of valuations, though it is reasonably priced at this point of time, I think the confidence would come if consistency in numbers is achieved. So I think I'm not moving uptick probably in today's session, but I think we'll wait for more clarity to occur on all these three counts.
Okay, while we are on it, since we have very limited time, if you can quickly take us through your buy argument for Voltas.
Oh yes, and clearly I think if you see the business breakup, UCP, which is the unitary cooling products, accounts nearly for 49% of the top line for Voltas. It has a 20% market share. The distribution touch points, dealer touch points are close to 10,000 odd. It's got a very strong sales network in tier 2, tier 3 cities, where a lot of its sales probably come through. And clearly even in terms of competition, I think the after-sales service has been exceedingly good. Now if you talk about the other segment, which is the EMP segment, the electromechanical project segment, I think that segment had a few issues over the past few quarters, but a lot of these fixed cost contracts getting out, a lot of the legacy orders actually getting completed. Our take is that with newer orders coming through, the margin expansion specifically for this segment might be reasonably better. So our own take over the next 3 years is that the margin expansion and the EBIT front would expand from 1% to 5% with the top line growth of 7.3% occurring over that time period. Again, I think on the engineering product side, it's very small and minuscule portion, but I think that has been growing very, very decently as well. So clearly I think if you break all these three segments together, the EBIT contribution of UCP, which is going exceedingly well, and our own take is that top line growth of 12.5% and EBIT growth of 10.5% over the next few years is not ruled out, and that actually accounts for 72% of the EBIT contribution. Clearly I think there would be concerns with crude oil going down, and clearly I think that would have some amount of saying effect as far as the EMP segment is concerned. But our own take is that two major things are coming down in the Middle East, the Dubai Expo in 2020, the Qatar World Cup in 2022. So I think the tendering for all these projects will still be extremely strong in spite of the crude oil price fall. So on a consolidated basis, our own take is a 9.8% top line growth, close to 6,800 odd crores. You're probably looking at cash flows which have come through in the last few years at 618 crores. You're looking at the debt-free company with a net cash balance of 247 odd crores, which will basically lead to ROEs expanding from 16 to 19%. Our own take is it trades around 17.5%, which is quite reasonable. Any decline becomes a good buying opportunity with a target of 353 with an EPS of 16.8 rupees.
All right, thanks a lot for that. 353, that's about a 20% gain even from here. Thanks a lot, Mayuresh, for joining us with your take. We still have a few more stocks which Vinod has given us.